Alright, let's dive into something that's been buzzing in the financial world lately, and trust me, it's more fascinating than it sounds. So, Egypt's banking sector just dropped some numbers that have everyone talking. Here's the deal. Domestic liquidity hit a whopping EGP 15.26 trillion in the first half of 2026. Sounds impressive, right? But hold on, there's a twist. This figure is actually down from the previous month. Personally, I think this is where things get really interesting. It's not just about the numbers, it's about what they mean. A decline in liquidity could signal a shift in how money is moving through the economy. Are businesses holding back? Are consumers saving more? Or is this just a blip in the system? What many people don't realize is that liquidity isn't just a fancy term, it's the lifeblood of an economy. When it dips, it raises questions about spending, investment, and even confidence in the financial system. Now, let's break this down further. The money supply itself dropped to EGP 4.492 trillion in June, and currency outside the banking system also took a hit. From my perspective, this is a double whammy. Less money circulating outside banks could mean people are either saving more or spending less. But here's the kicker. Non-government local currency deposits actually increased. That's right, banks saw more local currency flowing in, particularly in time deposits and savings certificates. What this really suggests is that while liquidity is down overall, people are still trusting banks with their money. But why? Is it higher interest rates? Economic uncertainty? Or something else entirely? One thing that immediately stands out is the household sector's massive share in these deposits, EGP 7.004 trillion. That's a lot of savings. If you take a step back and think about it, this could be a sign of caution. Households might be preparing for a rainy day, which, in my opinion, is a smart move but also a red flag for consumer spending. Now, let's talk about foreign currency deposits, because this is where things get even more intriguing. They declined significantly, dropping to EGP 3.264 trillion. Foreign currency demand deposits and time deposits both took a hit, with the household sector still holding the largest share. What makes this really interesting is the timing. Egypt has been dealing with currency fluctuations and inflation pressures, so this decline could be a reaction to those challenges. Are people converting their foreign currency into local currency? Or are they simply holding off on keeping money in banks altogether? This raises a deeper question. What does this mean for Egypt's economy in the long run? A detail I find fascinating is the private business sector's role here. They're holding a substantial amount of foreign currency deposits, but it's still less than the household sector. This could imply that businesses are either diversifying their holdings or hedging against risk. If we zoom out, this data paints a picture of an economy at a crossroads. On one hand, you have increased local currency deposits, which shows trust in the banking system. On the other hand, declining foreign currency deposits and overall liquidity suggest caution or even uncertainty. Personally, I think this is a reflection of broader global trends, economic instability, inflation fears, and shifting consumer behavior. But here's the thing. Egypt's economy has always been resilient. So, while these numbers might seem concerning, they could also be a sign of adaptation. People and businesses are adjusting to new realities, and that's not necessarily a bad thing. To wrap this up, what we're seeing in Egypt's banking sector isn't just a bunch of numbers. It's a story of an economy in motion. It's about trust, caution, and adaptation. And while there are definitely questions to be answered, one thing is clear. This is a moment to watch closely. So, what do you think? Is this a cause for concern or just a natural adjustment? Let me know in the comments below, and don't forget to hit that like button if you found this breakdown insightful. Until next time, keep thinking, keep questioning, and stay curious.